Hi, I'm Brien Lundin, and I'm the editor and publisher of Gold Newsletter. I'm here in Toronto at the Metals Investor Forum, and I have the great pleasure of talking with Scott Eldridge, the CEO and director of Canagold Resources. And Canagold is a company I've been recommending in Gold Newsletter because you've got an extraordinary project. I was saying earlier, you've done the hard part. You found 1 million ounces of 10 grams per ton gold. And the project, the deposit, the resources sitting there was a previously operating mine. Let's talk a bit about why it ceased production at one point in time.
Yeah, absolutely, Brian. So rewind the hands of time back to 1938. That's when they first started operating the mine. And the old timers there, they were mining it underground. It's a mesothermal gold vein system. They were mining underground, although very shallow and close to the surface. They only went to a maximum depth of about 150 meters.
Yeah.
And
these kinds of deposits go down potentially kilometers.
Yeah, great point. So a mesothermal vein system, they can go for 1 to 2 kilometers, and we've seen that before in BC. We've seen it in Ontario. We've seen it in Australia. It's a well-known fact in the geological world that these can become what I call generational assets, meaning they can literally have a 20 or 30-year mine life. But just to rewind to your original question, it ceased production back in 1951, and it's an interesting story why the operation stopped. So at the time, they were not producing gold doré bars on site. And by the way, that's how we're moving the project forward. But rather, they were actually producing a gold concentrate. And they would barge the concentrate out on the river to the Pacific Ocean, heading south to a smelter in the U.S. in Washington State. And in 1951, their shipment of gold unfortunately encountered a heavy storm in the Pacific Ocean.
Really?
And the barge sank.
Okay.
And they did have a loan into the company at that time, and that, in modern terms, forced them into basic bankruptcy, and they shut down the operation in 51.
Sinking the barge sunk the company.
Yeah, and everyone likes to ask, well, can you go down there and look for the gold? Well,
it's concentrate. Right. Infinite dilution.
It's diluted into the ocean. So they lost their gold, and as we produce doré bars on site, we'll definitely not encounter that same issue.
Right.
Yeah.
So the deposit, again, is extraordinary. You're talking about when it gets back into production will be one of the richest mines in the world in terms of grade. Let's talk a little bit about how it compares. I mean, it's in all categories, 1 million ounces of 10 grams per ton or thereabouts. Let's talk about how that ranks in the world.
Yeah, absolutely. And I'll just point out, as we go into more detail, that 10 grams is not the resource grade. It's more the diluted head grade to the mill.
Yeah.
So when companies go from a resource to a reserve, when you're doing a feasibility study, all of a sudden you have a mining dilution rate factored in. This is for underground mines. And it could be anywhere between 10 and 30%, depending on the deposit or mining widths. So in our case, our mining dilution rate is 20%. So that published grade of just over 10 grams per ton, that has a 20% mining dilution rate factored in. So we will not see a drop in grade as we go from resource to reserve.
And that's not an apples to apples comparison with other companies, because at the levels of indicated and inferred resources, typically you don't see that mining dilution already applied to the resource.
You're absolutely right, and we just prefer to take a more sort of cautious approach as we de-risk the asset. And if we look at that comparable grade, not to other resource grades, but actually to operating mines, Canada, Australia, Brazil, they're home to these kind of off-grid, high-grade gold mines. So if you want to compare it to other projects in Canada, if this were a mine again, we'd be the 6th highest grade gold mine in Canada. And then on a global scale, it would be the 11th highest grade gold mine in the world. And when I say gold mine, these are commercial scale mines that are doing, 50, 100, 200,000 ounces a year that would be very suitable to be inside public companies.
Yeah, and it's important to note that right now what you're doing, again, you've done the hard part. You find 1 million ounces of ultra high grade. You're upgrading the resource right now to a higher confidence level and going toward de-risking it, going toward production and getting to that status as one of the highest grade mines in the world. How is that going?
It's going very well. So all of our stakeholders that are a part of the project are very supportive of what we're doing. We have great shareholders. We have a great First Nations group that we work with, in addition to other local community members. And we're doing everything by the book, as we should. We're dotting our I's, we're crossing our T's, doing everything to the highest ESG standard, as we should as a Canadian company in British Columbia. And we're getting into the permitting process. So in terms of timelines, our prediction is that we're probably 2 years away from being fully permitted and shovel ready to go build the project. And 2 years can sound like a long time, but if you look at the mining space from discovery to when a mine is built, depends who you ask, but it's typically 20 years.
Yeah, and
So we're only 2 years away from that.
A big part of that is finding the gold to begin with,
That's
which
the
was
hardest
done.
part.
Right.
That's been done.
Yeah.
But even though we've delineated this high grade 1 million ounces, that's not the end. So we've already spoken about this a bit earlier, but there's always this down plunge potential or these parallel on echelon veins that you can see in mesothermal systems where the million ounces is purely a base case. And over the coming years, as this goes into production and becomes a mine, could this be a total 2 million ounce deposit? The answer is probably yes.
Yeah, yeah, and that's the exciting part. Now, there's really two paths for investors in the company right now. You are going toward production. It is obviously, from the economics we've seen, something that will most likely end up in production and very profitable. So that's one outcome that could be very profitable over the longer term. But as you're de-risking it, the project, then you become very attractive to larger mining companies that could take you out at some point once a shovel-ready project, or not even shovel-ready, a ready-for-development project, and again, a world-class project. That's another avenue. The really exciting thing for me is that exploration potential, because if you look at the depth of the resource that you have right now, and you look at the depth of most other mesothermal deposits around the world, tremendous potential to depth, right? I mean, potential to multiply the size of the resource.
Absolutely. So the maximum depth of our resource right now is 600 meters below surface, and other analogous mesothermal deposits can go for 1 or 2 kilometers below surface.
Yeah.
So we're literally only scratching the top, call it 1/3 of the potential. And other projects that come to mind would be the Brien Lundin mine in British Columbia, a very famous mine that went for 2 kilometers. That's a mesothermal system. One of the more common names that people would recognize is Kirkland Lake's Fosterville mine in Australia. Very successful project. That's a mesothermal system. So, these types of deposits have a very strong reputation of not being cut off at an 8 or 10 year mine life when you go build the thing and, then you're doing the reclamation and it's over. They just continually discover more ounces. It's been the same case for West Dome in Ontario.
And they not only discover more ounces in continuation of the resource, sometimes they hit those really high grade resources that were, these jewel boxes, as it were. But you're finding, even within the depth limits of the current resource, other veins that are not currently included in that resource, high grade vein systems, right?
Absolutely. So our resource is sort of from that 150 down to 600 meter level. And our grade is fairly homogeneous from top to bottom, which means the mining side will be very predictable, where your grade and dilution in year 1 will be the same in year 8 or 10. So you want more predictability, which is great.
And that's been a stumbling block for some other companies.
Yeah,
without mentioning any names.
Absolutely. But on the other hand, mesothermal systems, as you're sort of alluding to, they do have the potential to be higher grade at depth. We haven't seen that yet, but we also haven't drilled it to depths beyond 1,000 or 1,500 meters. So nobody knows what's really down there. But from a geological perspective, we see no evidence that it doesn't end in terms of the main vein, the C-West main vein plunging. But in addition to that, as you're asking, we are seeing these on echelon or parallel veins. And in particular, we've had several news releases on, simple names, the C9 and the C10 veins, where the C10 in particular, from a mining perspective, it would be very close to the spiral decline, which means it's an easily accessible vein based on our PA mine plan, which has a low capital cost. So at the end of the day, the C10 can add ounces there. It would probably be upwards of 100,000 ounces.
And that's not included in the current resource.
It's not in the current resource. So, and there's also no geological evidence that the C10 has ended yet. So it appears to have the same down plunge extension as the C-West main. It just needs more drilling.
So potential to depth and laterally.
Exactly.
You drilling right now?
Not yet,
Right.
but we are preparing to start the summer drill season.
Okay,
We
so
we
on the
have two
cusp of the
rigs.
summer season.
Yeah, we have 2 rigs sitting on site, just
Okay.
waiting to be restarted.
So that would seem to be the next catalyst.
Yeah, we need to do more infill drilling on the inferred,
Yeah.
in addition to the 30,000 meters that we've done over the last
Right.
12 months. So our sort of interpretation of the resource model is that we probably need another 16,000 meters of drilling, which is not a whole lot of drilling,
Yeah.
to get to over 1 million ounces of measured and indicated, because we can't include the inferred
Right.
in our feasibility study
Okay.
as we get into proven and probable reserves.
Now, one of the key things that I've been talking about to investors here at the show is the fact that we're in the bottom of a market. There's a very deep market malaise right now. So if you're in this game, you love the exploration stories, the big potential of those exploration stories, but you can find companies that have, again, 1 million ounces of high-grade 10 gram per ton gold trading at fractions of where they should be trading in a normal market. So you can get the kind of potential that an exploration play would normally provide by just getting in at the right timing in some of these more established and I would argue less risky plays like Canagold. So Scott, thank you so much for joining us today, and I urge all of our listeners and watchers and viewers to explore Canagold, look into it, because the timing is right.